Joining me now is Graham Kerner, who is the director of the Kerner Perspective. Graham, thanks so much for your time.
Sure.
Perhaps if you can just give us a little bit of context as to, since this rally started, when ANC President Cyril Ramaphosa won the race ultimately, how far have these banks run?
They've run very far. So if you think Standard Bank was in the 160s, Barclays was 140, early 140. So they've run very hard. I think if you look on a 1 month view, we're already reflecting some of the CR victory. So yeah, they've run 20% plus.
Who's gained the most?
I think Standard has run very hard. Barclays has run hard. FirstRand, of course, has run hard. The laggard in that group is Investec, and I think the reason for that is A, Brexit. Of course, they've got big UK operations, and then there's the foreign currency translation effect as well. So Investec's virtually flat, but Standard Bank's had a very good time. It's gone from, let's say, early 160s to 206, 207 Rand. Really, I think, has been the standout performance. But FirstRand also great performer. Barclays has had a good rally, but almost in the week or two ahead of the elective conference, it was coming under pressure. I think maybe on concerns that if the NDZ camp won, you know, these issues around Bancorp might have resurfaced. But yeah, they've all had a great time. They've rewarded shareholders very handsomely.
And it's incredible that it's just sentiment, because nothing has actually materialized in fundamental economic change.
I think that's absolutely right, and I think if you look at, as I was saying, even in the run up to it. The market, all those wise people in the market seem to be saying a CR victory was on the cards, and you saw, let's say, the SA Inc. stocks actually rallying for the few days in the run up to that. But when you look at how tight the race was, you know, there was actually we were at risk of giving back a fair amount of that. I think to your point, exactly right. The other day, IMF saying, you know, South Africa will probably grow GDP 1% or thereabouts. And although it's better than 2016, you know, 2017.
It's still pretty low.
It's pretty anemic, and I think exactly to your point, the market is saying the tone and the message that was coming out of, you know, Group SA, for example, at Davos was, we'll fix whatever needs to be fixed in let's say in the mining charter, for example. But these things do still have to happen. So I think on balance of arguments, the South African banks have been laggards for a very, very long time. We've held probably 16 to 18% in, you know, a combination of the big South African banks for some time. So we're absolutely delighted with this. But they have been really serial underperformers for an extended period of time. But now they seem to be discounting a little bit of more good news than is probably deserving. You look at a Standard Bank on a 14 multiple. I think for the financial year to December 2018. Maybe they give us 8 or 10% earnings growth, because, you know, tomorrow's earnings or 6 months from now's earnings are affected in the transactions, let's say, in the currency transactions and the new loan applications that happen now. So I think there's not enough going to be in the early part of 2018 to materially impact the earnings, and that makes them look historically slightly demanding, although the South African banks always trade on undemanding ratings.
But is that universal? You did mention Standard Bank in terms of which stocks are currently expensive right now. Is it across the board?
Well, I think Standard is looking more expensive. If you look at Barclays, for example, it's not expensive at all. But I think the earnings growth for year ending December 2018 is probably going to be a good 4 or 5 percentage points below Standard Bank. So I think it's been a relative laggard, and still the questions, I think, around, you know, the ABSA lifeline and stuff like that. But I think out of all of them, ironically, Investec, just on a multiple, looks reasonably cheap, and Barclays Africa looks reasonably cheap. Nedbank to a degree, but I think Standard Bank and FirstRand are probably the most expensive. The good news, of course, is you're going to get results out of FirstRand, you know, full year quite soon, but or in 6 months' time. But all of them actually just feel as though there's not a lot of rally left.
But then the Moody's announcement expected very soon, I think it's next month or so after the budget. Are banking stocks pricing in a downgrade? I'd say that probably not, given the fantastic outperformance we're seeing.
So I think I did this show, I don't know, maybe 8 months ago, 9 months ago, and I was saying, look, the whole issue around ratings downgrades, I think, was a bit of a red herring in the South African banks, because they don't actually get a lot of foreign funding. I think what's also happened, if you look at our bond market, it's, national bonds have firmed a good 100 basis points from when they were spooked. And even if you look at the creditors' attitude towards Eskom with the new board, I think there's a new tone. So on balance of arguments, if we did get a downgrade, I don't think it would have been catastrophic for the South African banks. They're already reflecting the higher borrowing costs. And as I say, I don't think they're terribly dependent on foreign funding. But I think right now it looks as though the market's saying maybe Moody's will give us the benefit of the doubt, as they have done. And they're going to say, okay, well, clearly a lot of good messages and good statements coming out of Finance Minister, the Deputy President, just in terms of the ANC policy going forward. So I think the market's sense at the moment is we'll get a stay of execution from Moody's, but then to your opening question, we actually need those policy changes and we need to see the economic growth coming through quite quickly.
So Moody's may or may not be the big problem for the rally that we're seeing now in the banks. So what will likely stop the party?
Well, I think there are a few things. Of course, global markets have been strong. So, yeah, of course, the question is how much of the Rand strength is Rand strength stroke emerging market strength? How much of that is dollar weakness? And I think there's a combination. But I say a significant portion of that is attributable to, let's call it the CR factor. Yeah, but I think what will probably weigh on the banks is gravity. When you normally trade on an 11 or a 12 multiple and you're suddenly trading on a 14 or a 15, and there's not that earnings growth coming through, I think that'll probably be what weighs, firstly. Secondly, our view is that equity markets globally have, and you get pockets of value, but globally markets have rallied ahead of the fundamentals. They're looking expensive. And there are storm clouds building in terms of inflation in the US, in terms of rising bond yields. You've seen the US 10-year move through a key level. You've seen the 2-year move through a key level. So I think just on balance of arguments, the world markets and particularly emerging markets have had a good rally, and you just get the feeling that I think the market is poised for a little bit of profit taking.
And the bank's under quite a bit of pressure today. What do you think is motivating the more than 3% declines that we're seeing in some of them today?
We try and explain. I can try and give you a theory on why banks will do whatever. It's impossible to try and sort of really get into the psyche of the market. My best guess is exactly what I'm saying. I think markets are saying, Standard Bank's gone from 170 to 206 in a very short space of time. The fundamentals have yet to actually materialize. I think you probably got a few people saying, okay, thank you very much, I'll lock in some returns and see if I can't get them a little bit lower down. And I think that strategy is actually quite sensible. I'm not sure if I would apply that in the case of Investec and Barclays Africa, but I think in the other three big boys and Capitec, that's probably sound.
Graham, as we wrap up, this good time that we're seeing in the banking sector, is there any benefit for your average Joe consumer?
Well, I think it's a cocktail of events. So the stronger rand, of course, is taking the pressure off inflation. That will probably translate together with policy clarity and hopefully a very favorable, or let's say a carefully crafted budget. All will probably conspire to see rate cuts, more rate cuts possibly than we would have thought 3 months ago from the SARB. That is good, but clearly there's a renewed optimism. So I think all things considered, South African banks are looking forward to a much better year. If you look forward January to December, than they've experienced since the global financial crisis. I would argue in terms of fundamentals and just having greater policy impetus or a desire to get the big stuff right. So I think that the mood is favorable. It's just maybe there's a year or 2 years worth of good news priced into a few of them.
Well, we'll leave it there. Thanks so much for your time. That was Graham Kerner, who's the director at the Kerner Perspective.